everybody, and welcome to today's webinar about digital distribution in life insurance. Today's customers expect speed and convenience, whether they interact with a company, whether they're ordering groceries or buying life insurance. More and more, they expect this experience to be completely digital. So how does the insurance industry respond to this change? How do they marry the experience that has been built in brands and people often over decades with the world of single-click consumption? Many people in the industry wonder where this leaves brokers, agents, independent insurance specialists. Is there a place for both human touch points as well as digital engagement to coexist? And if so, how does one make this a seamless experience while still adding value to the end customer? Today, we'll hear from two speakers as they unpack digital distribution in life insurance, both from a direct and intermediary perspective. And after that, there'll be a panel discussion where we will deal with some questions. So please, if you have any questions as we go through the presentations, we will keep note of them and use them as discussion points in the panel conversation towards the end. So please feel free to add any questions or comments that you may have in the chat section on the call. And with that, I'll hand over to Eric, who's first up. He'll be talking about a direct digital distribution. Eric is the managing executive for life insurance at Hollard International and has over 22 years of experience within the life insurance industry. And Eric's major focus over the last 15 years has been on life insurance strategy and implementation across the African continent, with a specific focus on bank assurance and alternate distribution. So Eric, over to you.
Morning. Thank you very much, Lee, and thank you very much to everybody for the opportunity and platform. I'm going to upload a presentation, and I know it's going to be a little bit quick. There's quite a bit that I've included. So if there's anything that you see that we need to go into a bit more detail on, please just make note of it and we'll come back to it in the panel discussion. So I think in terms of the presentation, if I can just go through the agenda, just firstly to start with, who is Hollard International, where do we operate, what has been our experience on the continent, in terms of our growth on the Hint Life business, how have we seen the market actually progress, and how have our distribution channels also grown in that same realm. Then some practical examples of what we've been doing on the digital distribution side. We have some very exciting initiatives that we've already begun rolling out across the continent. And then, from my opinion, things that I've found that are quite important, what I've deemed key success factors for digital distribution. And this is sort of my view on what we focus on. So in terms of Hollard's growth story, so we really started the African expansion in 2008, where Mozambique was our first country that we entered into. Thereafter, 2009, we expanded to Namibia. In all of the countries where we've entered into, we've started with our general insurance license first, and then our life insurance licenses have followed subsequently. 2011, we launched our Hollard Life Zambia. That was as we had a large bank assurance partner there, and we launched the license largely to support that partnership. And that now has grown into a fully fledged life insurance license, catering to all products and all distribution channels. 2012, we launched the Hollard Life Botswana business. 2017, we acquired a company called Regent in both Botswana and Lesotho. And that facilitated the merger of those entities. 2017, we relaunched our Hollard Life business in Zambia. That also then dictated a change of strategy in the business, and you'll see that coming through in terms of what's happened as far as our product distribution mix goes. And then in 2018, the last of our licenses that we started was in Hollard Life Ghana, and that was a greenfields operation. Just some background in terms of Hollard. So Hollard is actually a privately owned insurance company, started out of South Africa, but certainly the expansion focus is now on Africa and globally. The business is a partnership-focused business. We've been successful in partnering with over 100 different partners across the continent. And those partnerships are very wide-ranging, from bank assurance to retail distribution to mobile networks to alternative distribution partners. And I think in terms of our growth story, where our focus is around alternative distribution and how do we leverage the successes and the key strategic strengths that our partners have, and complementing that with our insurance expertise and our ability to sell and distribute insurance products. As I mentioned, just some background on our footprint. So as I said, in Ghana, we started in 2018. We're still in the 17th position. We have about 2% market share there, so still quite small, but exceptionally strong GWP growth and very, very good prospects for future growth there. I think Ghana, in terms of having a greenfield startup, gave us the opportunity to really assess the market and put the right products through the right distribution channels. And I think that's complementing that high growth percentage. In Namibia, our life license is still quite a bit smaller than our general insurance license. We were number 2 in the market. We have a very strong team there. And I think in terms of the growth, it's negative for last year, and I think that was very definitely due to the impact of COVID, as well as our shift from a very large credit life scheme. We've been very strong in terms of growing the individual life business there through direct distribution, as well as call center and broker distribution. Botswana, as I mentioned, we're the 3rd biggest life insurer there, very strong GWP growth and a very good mix of products. Lesotho, one of the smaller markets, a shift in business, and you'll see the GWP growth is also quite subdued. And I think they're largely due to the fact that, again, our focus on the group life side had slowed down, but we have shifted the mix of business now to focus on the individual life products. Mozambique, mainly a credit life market for us, very low individual life business. And I think in terms of the GWP growth, that's largely aligned to how the credit life portfolios across the banks have also been affected. And then in Zambia, good GWP growth, good prospects in the Zambia market, and we've been able to introduce new products and new distribution opportunities. I think what's important is how we've shifted our product mix, and you'll see our future budgets looking forward. So the businesses, when we started, our progression has definitely been from a group risk and credit life business historically. And as I said, in 2017 in Zambia, I think that really marked the stage where we started introducing a very strong direct distribution strategy across all of the countries, introducing individual life business, developing our own direct distribution through in-house tied agency forces, as well as expanding into direct and digital distribution. And our growth strategy for the rest of the countries certainly follows suit. You'll see a very strong shift from our group risk and credit life dependency to now taking charge of our own destiny through direct distribution. And a key channel to that is digital distribution, whether it be through mobile distribution, through call center distribution. Web distribution hasn't picked up that much. It is one of the channels that we have, but it's not our strongest focus area. But I think very significant in that we made a very strong strategic shift to focus on the individual life business, both for the higher net worth as well as for the emerging consumer. And in that micro space, we see very high growth prospects, and that is largely centered around mobile distribution. Some of the digital initiatives that we have in place. So Lesotho was actually the first country. We have a partnership with Cassava FinTech and with EcoSure. It was a historic partnership that we reenacted. And in 2019, we really started focusing on overhauling the Lesotho business. This is a direct mobile play whereby customers through the EcoSure mobile cash wallet are able to buy a product called Rebolekile, which in Basotho means we are covered. And yeah, the product is an incredibly simple product. It's actually based on a product that EcoSure Zimbabwe offers, where they in fact have over 3 million subscribers on the platform. So using the EcoSure platform, we've been able to roll it out successfully in Lesotho. We've had a very good response to the product. It's largely driven through above the line media campaigns, through radio campaigns, through newspaper adverts, where customers register via USSD on the mobile platform. We took a similar product and rolled it out into Ghana, where we partnered with Vodafone. The product there, Mabambo, is a very simple, low-cost funeral product. We launched that in June last year. We've had an incredibly good response to that. And in terms of where we are in top-line budget, probably about 350% ahead of where we expected to be. So certainly the growth prospects are very good. And we've also had quite a lot of interest in the local market in terms of putting it onto other mobile networks. If I just go back a step to Lesotho, I think also just in terms of the top line performance, over a very short period of time, our Lesotho business has grown to almost 10% of our top line revenue. So you can see the impact that the microinsurance scheme has. In Burundi, we partnered with a local life insurer there. We facilitated the launch of the product. That was also at the end of 2018, 2019. And again, there, it's a very small embedded product, but there we've grown to 37,000 customers. New initiatives that we're focusing on, Botswana and Kenya. Kenya, we are looking to enter into the microinsurance space with a very exciting product offering, slightly different to what we have in the other markets. And Botswana will be looking to replicate something similar to what we have in Lesotho. All of those will be going live either the first quarter of this year or the second quarter of this year. So very exciting prospects across the continent. If I just want to show you an example of what the product actually looks like. So if you just allow me, I just want to play. This is the marketing campaign that we actually launched in Ghana.
Mommy, I have 2 boys in my home. See, my leg is broken. The hospital bill, they are finished. My house money, all they are disconnected. So what for no money? You come and say it down, mommy.
Me bambo life insurance and tip and was some. A player to me, I did a year, I did chance from body, Ukofeska him. Me catch the book banku. With little money like 1 city, when you are from here, or catch him say, insurance dear. A big man talk. You just dial *269. No about hash. Where we
always is a chicken. It's a chicken.
With 1 Ghana cedi, 5 Ghana cedis, 15 Ghana cedis, or 30 Ghana cedis per month, you can get up to 30,000 Ghana cedis for funeral and disability cost. Dial *269 hash to sign up via Vodafone Cash today.
wait, I'm not.
Mebambo, insurance made for you.
So I think just a couple of important things to point out. So the Mabambo product, as I said, we launched that in conjunction with Vodafone. We have our partnership with Cassava FinTech, providing the platform for us that integrates into the Exergy line of business system. This has been largely driven through social media. You'll see the influencer there in the advert. He's a very well-known influencer within Ghana. And yeah, the product itself, incredibly simple. For 1 CD, you get 1,000 CD cover. For 2 CDs, you get 2,000 CD cover. And you'll see the process is that you actually register via USSD short code. Now, that's a very important point to highlight. So using the USSD platform, 1 gives us a fairly robust bulletproof platform on which registration and servicing can actually take place. And 2, it also decreases the cost. If a customer self-registers, that they are able to register on the platform and not have to incur data costs. And you'll see in some screenshots that I'm going to show you now that the customers, the whole process is actually on the USSD platform. So it takes you through the entire registration process. The other thing that's very important on the USSD platform is that from an accessibility point of view, as long as there's the mobile network, which is a lot more easily accessible in sort of your outlying regions, as opposed to having data connectivity, it makes it quite widespread. So you're able to get a very good national coverage as well. So you're not just limited to distributing in the main metropoles. So just some background on the product, as I said, very simple. Each customer pays the same premium. So it is not age rated. So if I want 1,000 CDs cover, I would pay 1 Ghana CD. If I want to have my family members covered, my spouse, I would pay 1 CD for her 1,000 cover. And to register my children or my extended family, again, it would be 1 CD for 1,000 CDs cover. And we go right the way up to 75,000 CDs. If I just show you some of the registration processes, you can see here that it's all via the USSD interface. You put your mobile PIN in. Now, very important, this is through Vodafone Cash. In Lesotho, we do it through EcoSure, through EcoCash. So what we're actually using is the mobile network's KYC for the customer. So the registration is almost pre-done because the customer's details have already been pre-recorded. The unique identifier in most instances is the customer's mobile number. So you register, shows you the full terms and conditions are available for XYZ Mobile. You can accept it, you go through the process, register, has all your details because you've KYC'd already, whether it's for airtime or whether it's for the mobile, for the mobile money platform. We can do premium collection from airtime as well. Choose your location, choose the province. Which is the package do you want? Do you want 10,000 kwacha, 20,000 kwacha, 50 or 100,000 kwacha? All right, and then you confirm that you want to register for the Hollard Light package. And again, who do you want to register? Your dependents, add dependents, put their details, the region, etc. So you can see that the whole process is incredibly simple to follow. We use a can your grandmother register test. So if your grandmother is able to put the USSD shortcode in, she should be able to then follow the prompts and to be able to self-register. However, if the client feels that they would like a human touch point, we do also in the marketing campaigns make available for call center correspondence, as well as in the distribution space. We also have the mobile network agents for the mobile network who are able to market the product. So as they are selling the mobile money product, they would also be able to assist the customer to do the registration. Now, obviously, there are requirements in terms of selling of insurance products in the various markets. These are not registered agents. These are marketers. Where they assist the customer, they would use their mobile agent registration number, and we would be able to accredit them with assisting in the sale. In which case we could then pay them a portion of that marketing budget. And I think that's quite an important point. In countries where we have low financial literacy, we certainly drive a lot of the awareness via the marketing campaigns. However, there is a very definite need, especially within the life insurance space, to be able to actually go and explain in more detail to a customer where they have questions, where they have queries around how does the product work, how does the process work, how does the claims process work. So very important is where we have the agents that are also linked to this, that they have full training on this, because I think that's a very good piece of mind part of the process. And then lastly, from my side, in the experience that we've had rolling this out, as well as for some of the other distribution players that we have, whether it be through retail, through call center, through mobile distribution. These are some of the key success factors which we have identified. So the first one is when you are doing direct distribution, it is very important that you have a very, very strong marketing message, marketing proposal. Remember, in this space, we might have low financial literacy, customers might not understand the product, so it's important that you allocate quite a good percentage of the budget to actually driving the marketing process, especially if you are going to be using direct sign-up or self-registration. Ease of registration is key. You would have seen some examples of the screenshots. So in terms of the registration process, where we've KYC'd the customer on the mobile database already, the ability to pull that data in terms of assisting in that registration process is incredibly important. It also decreases the time that the customer is on the USSD menu. The product simplicity and affordability. And again, for a micro-insurance product, for a self-registration product, keeping it as simple as possible is absolutely key. So as I said, so for $1, you get $1,000 cover. Sorry, barking in the background. For $1, you get $1,000 cover. And if I want to add my dependents onto the platform, they would pay the same rate as what I paid. There's no premium difference between them. Platform stability is key. especially where you're doing your own self-registration. If I put in the USSD short code and I try and register, the platform has to be operational. If it keeps dropping or I can't complete the registration process, it's definitely going to, one, frustrate me, and two, it's going to raise questions as to, you know, how good is this offering? So we would potentially lose quite a few registrations if that platform is not accessible all the time. So that's absolutely key. Systems integration, so being able to integrate the mobile platform into our core line of business system is incredibly important. That assists in terms of the customer endorsements, any servicing requests that we have, as well as in the claims process. So the claims process needs to be as simple as the sign-on process, where they can actually intimate the claims themselves, and that claims registration process needs to then integrate directly into our core line of business system so that we can fulfill the claims promise of having claims settled on receipt of all the valid documentation within a 24-hour period. So that's absolutely crucial within the funeral space. Human touch points where necessary, we identified that as being very important. We had a lot of questions from customers when we started with just the self-registration process. How did systems work? How did processes work? And we realized that we needed to actually add to the self-registration process by having a call center backup, as well as then training the agents in the field on the mobile networks to be able to also help the customers on the registration process. The last one, which is incredibly important, is alignment between the parties. So where we're partnering with mobile networks, the fact that they are able to earn a non-mobile revenue from this is also incredibly important. So we make provision in the product pricing that we're able to actually remunerate the mobile networks for access to the platform, and where they are taking part in some of the servicing or functional areas of the value chain, that we also remunerate them from that. This does require development costs on their side, so it's important that they see the value in the proposition. And with those key success factors, those are not necessarily all of them, but I think if we focus on those and get most of those right, we would then have a very strong value proposition in the digital distribution space. So by my experience, yeah, that's where we see the future of digital distribution. It's a very key part of our African growth strategy. The one very important aspect to it is that it allows us to get very rapid deployment. So unlike having to grow an individual agent distribution space where we have to go out and recruit and train and then incrementally grow it, with the right product and with the right marketing message and pushing the product hard into the market, we're able to get quite rapid return as well as increasing sales volumes. So from my side, that's our experience on the digital distribution side. Lee, I'll hand back to you.
Thanks very much, Eric. Definitely some very useful and insightful experiences as well as pointers. Next up is Ben Berger, who will be talking about digitally enabling intermediaries. Ben is the digital insurance executive at SilverBridge and has over 15 years experience in the technology and actuarial fields. He's been directly involved in advising and implementing digital roadmaps for more than 20 insurance companies across Africa. And Ben also serves on the Systems and Technology Committee of the Actuarial Society of South Africa. Over to you, Ben.
Well, thanks, Lee. Guys, I'm going to jump right into it. Just share my presentation quickly. There we go. Cool. I'm going to be talking about intermediaries and specifically the digital enablement of those intermediaries. Just to quickly give you an overview of what we're going to be covering. The policyholder expectation, I think most importantly, you know, in the spirit of customer centricity, we're going to start there. Then we're going to talk a little bit about the evolution of the intermediary, what that looked like in sort of historically in the past few years, and most likely what it will look like in the future. I'm going to focus on the next 5 to 10 years specifically. Then after that, we will go into what the insurers need to provide in order to sort of facilitate all of this, to meet the needs of this evolving intermediary, but also the policyholder's expectation ultimately. Lastly, we're going to move into the technology partners and technology itself and what the role of that is in all of this. Okay, so the policyholder expectation, to start there, I mean, very simply, there's one of two things, and I think Eric has spoken a lot about that direct channel on the left. You know, he said a lot about the mobile channel also being very important, especially in the African space. We very much see the same. We agree with that, and we've worked with Hollard to sort of really understand that a lot better. So it's the direct channel on the one side, and then you've got the intermediary channel on the other side. I think although the intermediary channel is going to change and has already changed, especially with COVID in the last 2 years, or is it now two and a bit years, it will very much still be a very relevant channel, I think, especially in the next 5 to 10 years. So very much still something that we should definitely be looking at. But whether the policyholder goes direct or goes through an intermediary channel in whichever way, shape or form, at the end of the day, what the policyholders want is a seamless experience. So as the insurer, that's where we need to focus, making that experience as seamless as possible. As Eric also mentioned, I mean, the grandmother test is quite a good one, I think. At the end of the day, you would want, as a policyholder, your onboarding for insurance to be as quick and easy as possible. Okay, let's quickly look at the evolution of the intermediary. So, you know, why do we have intermediaries? Let's maybe start there. So, firstly, for expert advice, and the secondly, to bring that human interaction into the process, which very much speaks to trust. A lot of people out there want somebody to talk to that can advise them, you know, give them that expert advice and somebody that they can trust, somebody to sort of to help them through the whole process. Historically, that looks something like this. Very sort of manual process, and I think to a large extent not digitally enabled at all. There are a lot of schools of thought around how this will look in the future. You know, some people say we will move into that space where the robots do everything for us fairly soon. I think there's definitely a lot of merit in that, and we already see that happening to some extent. But my opinion is that most likely in the next 5 to 10 years, you'll see a lot of sort of digital intermediary interaction as opposed to completely direct. And I think an important factor there is if you look at that picture with the guy with the green shirt giving advice there, it's really the same sort of interaction. Also that human element that does play a role, and the trust that's still there. But that guy's got robotic tools that's helping him giving better advice. So it's enabling that channel in a digital way that makes it more seamless. The next step after that, intelligent process automation, I think will make it even more seamless and help that intermediary to really build that trust with the potential policyholder in a much better way. And at the end of the day, what you will still get, where we need to end up, is that great experience. So the policyholder wants a quick and easy onboarding, and with those tools, the intermediary is able to onboard that policyholder in a digital way very quickly and easily. Okay, so what should insurers provide to sort of facilitate all of this? So, you know, very simply, I think we should look at both. You should be looking at the direct channel as well as the digital intermediary channel for the next 5 to 10 years at least. The thing is, though, the trick here is it has to be seamless. So, you know, whichever channel you use, it's got to be very quick and easy. And the way to get there is through technology. You know, being able to translate all that digital information into something that, and we're focusing on the intermediary here, you know, translating all of that into something that the intermediary can use in a real-time fashion to give advice and build that trust with the policyholder, and sort of in the end onboarding the policyholder and getting that business for the insurer. Okay, so quickly looking at technology partners and technology itself, sort of what is the role that technology partners and technology plays in all of this? I think three simple steps. It's not necessarily easy to implement these steps, but I think on a high level, you could probably look at it in this way in terms of a digital journey. So firstly, modernization of your technology platform, and that, for instance, like your core business insurance system should be modernized to an extent so that it can plug into the digital world out there, whichever other systems those might be. You need to be able to partner with other sort of technology partners and different channels, and for that to be possible, you need to have that modernized base. I think you would have heard from Eric's presentation as well that that's very important, and also it's been a very successful a journey for Hollard because they had that sort of modernized base in place where they could do that. Next is digitalization. So I think digitalization will very much be a collaboration of systems, processes, and people to deliver that digital experience to customers at the end of the day. But again, you need to walk before you can run. So what I mean by that is you need that modernized base before you can sort of move into the digital world. Then lastly, intelligent process automation is the next step. So to make that process more seamless for the policyholder and the intermediary, that digital intermediary in the future, intelligent process automation could remove those repetitive and routine tasks to sort of help the digital intermediary give that advice in a digital way onboard the policyholder in a very quick and easy fashion. Cool. So lastly, how do we get there? Firstly, I think there are 3 steps here that I'm just going to quickly outline. Building a roadmap for this whole digital journey that you undertake as an insurer, and breaking up that roadmap into measurable steps. Don't try and do everything at once. Break it up into steps that's manageable and easy to report on. Then the next thing in that roadmap, a couple of things that you need to keep in mind. Make it easy for the broker. The easier it is for the broker to write your business, the more business they will be able to write. It's just the way of the world. So a wizard type format is something that we sort of subscribe to, if you will. So driving the process for the intermediary in a way that makes it quick and easy for them, and requires sort of as little as possible manual intervention from their side. Then next, real-time integration. On Eric's last slide, I think that was also sort of very much an important element to this, is your policy administration system in the back end needs to be integrated directly to the channel the digital channel that you are using, and you need to be able to get real-time quotes, all the way through from quotes to digital signature. It needs to be able to onboard that into the backbone of the system in a real-time fashion. Then lastly, when you move through this roadmap, show the value at each of these steps, both to your customers and to your stakeholders, internal stakeholders. This is a roadmap that will take a couple of years, maybe even 2 or 3 or 4 years to do. So it's very important to break it up and show that value at the different steps as you move through it. Well, thank you very much. Thanks, Lee. Back to you.
Thanks very much, Ben. I think also some very valuable tips in terms of, having to work with intermediaries in the market, still very much a reality for all insurance markets across the globe. Next up, we've got the panel discussion, and joining Eric and Ben is Gary Cook. Gary is the head of assurance at Evolution Life and has over 13 years experience in the financial services industry. Gary has extensive experience with long-term product development and is also focused on the strategy execution and channel profitability within Evolution Life. Ben, can I ask you to maybe stop sharing your screen, please? And then we can head into the panel. Good. All right. Maybe to start off with, Gary, if I can ask you, in your experience, how have insurers worked with this, combining both the human and digital touch points in the distribution process?
Morning, Lee, and thanks for the opportunity, and good morning to everybody else. And just excuse me, I'm getting my voice back from losing it over the weekend, so sounding a bit croaky. Yeah, I think so. So at Evolution Life, I mean, we're quite focused on making that distribution process as efficient as possible. I think we believe that there's a lot of inefficiency that exists in that process, and certainly that inefficiency gets passed on to the policyholder at some point, in the pricing of the product, etc. And I think by the introduction of the digital experience, we potentially have a better experience, and i.e. a qualified customer in our space, being pushed through to the call center. Somebody's done some research on the product, whether it be online, through social media, and has expressed an interest and at least has some idea of what it is that they're looking for, as opposed to, just the straightforward, good old-fashioned cold call, or a broker knocking on your door and, trying to sell you life insurance. I think those days are gone. We certainly are focused on qualified leads, whether it be into our call centers or into our face-to-face intermediaries, and certainly looking at even empowering the customer to sign themselves up. And if they get stuck along the way, then push the button and a consultant will assist you. So I think to a large degree the insurers in South Africa have probably got that right. Certainly in my own experience, as a policyholder with a number of insurers in South Africa, but it's certainly something we're striving hard to work on that process with our policyholders.
Perfect, thanks. Ben, Eric, I'm not sure if there's anything you guys want to add onto that point, or.
Yeah, I think if I can add to that, I think our focus, as I said, our business has migrated in terms of our distribution focus, and I think what we need to do is we need to make good on the promise of the right product available to the right customer through the right distribution channel. So a high net worth customer would have a different distribution requirement to, for example, a micro insurance customer. And it's important that the convenience and the customer experience is met across all of those various channels. I think where we're starting to see a lot of opportunities, especially in the African space, is bringing in alternative distribution. So we have non-traditional partners such as post offices, retailers, obviously the very well-established tied agency forces. So the intermediated channel is obviously a very important part of our overall growth strategy. But then certainly to augment that with call center distribution, digital distribution, and then as the market matures and financial literacy improves, then to start bringing things through like self-registration on the web portal, so chatbots, etc. I think, Ben, your point around artificial intelligence, very important. We're going to see a number of those sort of developments coming through. But ultimately, what's very important is the human interface behind it. Gary, you mentioned the ability to pick up the phone or touch the button and you'll have a human interface behind it. I think that's absolutely crucial, especially in a space like a life insurance type market where, as insurers and insurance professionals, we speak this language of insurance very fluently. But to the customer, to the man in the street, especially in a market where you might have 2% penetration, concepts like beneficiaries and dependents and sums assured or disability benefits, etc. Those very often can be foreign concepts. So we need to be very careful in terms of how we position it in easy to understand language and make the help available to customers to be able to explain it. It's definitely not a lack of demand that's driving low penetration. I think it's probably lack of understanding.
Sure.
Lee, if I may add to that, sorry, one last thing. I think maybe it's been implied with what Gary and Eric has said, but just to make it clear, I think that customer experience is going to be very much the differentiator, I think, in the future. Now, simplicity is the one thing, and Eric, you've talked a lot about that, and you guys have had a lot of success in implementing that simplicity across products. So it's not the product rules like in the past, which will be the differentiator, but that experience. How easy is it for me or for the broker to onboard? And I think simplicity plays a role, and then technology, the technology backbone there is going to be extremely important for the whole process to make that as smooth as possible. And I think an important thing to look at when you set this up is, before you do anything, what will the experience of the process be for the end customer, for the policyholder? What are they going to see? All those little things that they will see, all those touch points, whether that be artificial intelligence, or a robot that they talk to, and eventually maybe a person. But map that out all the way in terms of the end-to-end process. Then you start to look at the technology that you need and everything that you need to implement.
Perfect. Thanks for that, guys. Maybe, all of you have now touched on the various things that you can lean on and the role that the various pieces of technology play within a distribution process. But I think it's also pretty clear from the points that you've made and from the presentations that there is still a role for the intermediaries to play. But it seems as if obviously the value that they add within that process needs to change. It's shifting from what it was in the past to something else. How do you see that value in the future? How do you see the intermediaries really adding more value, I guess, in a digital process? Gary, I don't know if you want to maybe give us your views.
Yeah, again, I think it's certainly going to empower the intermediary. Again, in the past, you went in quite cold. You didn't really know a lot about the customer. With AI, ML, qualified leads coming through, you've probably got a bit of a pre-story on the customer, and probably a propensity to buy a certain product, that's been delivered in front of you. So hopefully, again, that the process is more friendly, more user-friendly, simpler, and I think also probably in this world of compliance that we live in, I think we get complied to death, certainly in the South African market when it comes to the regulator. I think the digital process could probably assist us in that, i.e. digital signatures, sending the document via WhatsApp for the customer to read at a later stage. We don't have this agent, and certainly in my world where we use predominantly voice distribution, we've got an agent reading verbatim, a debit order instruction form or a compliance form, and all of these things can just probably make the experience a little bit more painless, and certainly empower the agents. But one thing I do want to add is, and certainly the discussions I've had with my agents, is they've got to evolve. They've got to learn to deal in multi-channels. We're embarking on a pure digital acquisition sort of POC to see if we can acquire customers, still using the human interaction, but all via digital channels. And certainly, I think agents in this space, intermediaries in this space, are going to need to evolve and embrace the technology, I think.
Good. Eric, Ben, anything that you guys wanted to add to that?
Yeah, Lee, sorry, if I may just quickly, just adding to what Gary has said, I think compliance has been that's always a thorn on everybody's side. I'm hoping there's no compliance officers on the call, but that's a very difficult thing. But I think if insurers can interpret that, you can very much, and I think this is also what you're saying, Gary, you can partner with your technology partner to build that into the process and technology of the whole thing. Make it easy for the broker, make it easy for the policyholder at the end of the day, because that's what you want. So if you build that into the process, I think, as you say, Gary, that will just empower the broker so much more, give better advice, real-time quotes, and comply as we move through the process automatically.
Yeah, Ben, I completely agree with that. And I think, one of the benefits around a digital or an electronic environment is that you can bring through optimization into the processes. So it's either going to be a cost saving or it's going to help with an efficiency. So in the African space, we're still quite a bit behind where some of the more mature markets are. A lot of the agents and predominantly the individual life products are being sold by individual agents, and that process is very often manual. So the application process would be manual. The application form you've got a rate sheet that's on an A3 foolscap page, and talking the customer through, this is the rate, this is when you add family members, etc. And then the application form is filled out in triplicate, then it's taken back and it's manually collaborate. So it's a very cumbersome process. And what we're getting to, and what we've seen has been quite an instrumental shift, is that we can do it on an electronic front end. So using the tablet registration process, that then being able to seamlessly integrate into the core line of business system. So in our instance, we have it linked to the Exergy platform. So now the agent's able to go and sit in front of the customer, do everything on the tablet. The quote calculator is built into it. And then that seamlessly integrates, not having to then hand it over to another person where you might have a human error that possibly slows up the process or actually causes the contract not to actually incept. So, that process of taking the benefits of the electronic process and augmenting the human agent process, I think is going to be absolutely key. So certainly the future of the agent is without a doubt is going to continue. It's a very important part of the overall insurance industry, but I think giving them the support and the technological tools, I think will actually help grow the sector. I see it as being additive.
Yeah. Maybe just one last point, Eric. What you're saying there, I think is important in terms of the future. I don't think we are there yet in South Africa or Africa, but potentially in the future. And I'm going to be a little bit naughty here, but with things like social media and all of the data that flows into a backbone, the backbone system of the insurer, potentially we could build something that could suggest in terms of you as a policyholder, your specific financial portfolio, what cross-selling and upselling opportunities do we have once you are on the books? Something that will grow the sector even more to everybody's benefit. It's a very exciting future, I think, in terms of AI and robotics. Those playing a really exciting role in the growth of the industry.
So Ben, I think, sorry, to add to that, and it's an area that we're certainly focusing on, is around the data-driven organization. And this is especially relevant where you have partnerships in high data generating environments, such as mobile networks or banks, etc., post offices. So you have a lot of customer data. If you have a customer base of a bank that has in excess of 10 million customers, you've got a very data-rich environment. And to be able to then determine what is your propensity to purchase, or identify what are your cross-sell, upsell opportunities, identify where are key life events that have taken place. So if you can, through a bank's data, if you are able to determine that an education loan has just been taken out, has that customer just had a child? That's a purchasing signal, for example, or you've registered a new savings product, etc. So that data-rich environment, I think, in terms of being able to do smart analytics and do lead generation is definitely going to be, and then the ability to then pass that on to the relevant distribution channel. So creating the lead generation capability potentially for a call center or a physical intermediary channel is absolutely key.
Agree.
I'd be interested to know, maybe Gary and Eric, from both of you, where you've seen a pure digital channel or some channel which is basically straight through with little to no human intervention versus a more traditional channel, even if it is digitally enabled. How do you see the difference in retention? Is there a difference? How do retentions compare in those two sort of lines of business? Do you see that there's a difference in a fully digital channel versus an intermediary driven channel?
Yeah, so I think Eric is probably going to be the better one to answer, because we're certainly on the beginning of our journey. But a theory we have is that retention is probably digital is going to allow us to potentially improve our retentions. One of the challenges I think we have in the life, certainly in the long-term space, is how do we engage with our customers on a regular basis? When you buy a life insurance product, it's generally long-term, and it's either retirement, death, or disability. I mean, it's not something that you want to talk about all the time. But how do we remain relevant, on an ongoing basis? How do we earn the right to collect the premium next month from the customer? And I think certainly our belief is that the introduction of digital, where we can push certain, notifications, upgrade the product, as I think Ben was saying earlier, a bit of an upsell. You've bought this product, we see you didn't take that, how about this, or et cetera, et cetera. So we think the theory there is if we can engage more with relevant content with our policyholders through digital technology, we think we're going to have a better experience in the retention space. But maybe Eric can answer that a little bit with more experience.
So thanks, Gary. I think for us, the big differentiator is in terms of premium collection. So, typically the intermediary channel has been able to sell a slightly more complex product, and the premium size would be higher. And as such, the premium collection would also differ. So, we would either see a stop order premium collection, which has a very, very good premium collection rate, a very good success rate, as well as the persistency levels on that type of product are incredibly good. Salaried staff, payroll deduction, our lapse rate is incredibly low on those products, and we price accordingly for it. In the digital space with self-registration, as we're doing at the moment across the continent, typically that is a micro-insurance type product, and there it's facilitated through the mobile network. And in most instances, if not all, we're doing our premium collection through mobile money, and in some instances via airtime deduction. Now, the customer profile is very different there. So typically that person may be self-employed, they may be a trader, and then the nuances with mobile money come into play, because typically the research that we've done has shown that people typically only have funds in their mobile wallet for approximately 10% of the month. Now, that makes it quite challenging when it comes to premium collection on a specific date. If there's no funds in the wallet, you're not going to you're not going to be able to actually collect the premium. So there we need flexibility in terms of premium collection, that it's either incrementally based, so X amount per day, or Ben, to the earlier point around, if we have analytics driving what is the wallet being used for and when are there funds available in the wallet, that can also guide us to when are we successful in terms of collecting the premium. What we found as an experience, once the customer is onboarded and once we're doing regular premium collections, our persistency, whether it be in the human channel, on the intermediary side, or whether it be on the mobile self-registration channel, is actually very, very good. But I think it's number one, it's actually incepting the policy and getting that first premium collected. Typically, once we get over the third premium collected, the customer's in a routine, they understand they also want the product. There's a very definite need for it, and then we see normal lapse rates apply. There's not much difference between them.
Okay, great. That's very interesting. Thank you. I think we have time maybe for one last question. I think that both of you are obviously very experienced in the insurance industry, working in financial services directly, and Ben, obviously from your side, working with insurers for many years. And as we all know, the industry has changed a lot over the last while. There's definitely new entrants coming into the market. I mean, Eric, you've mentioned some of the companies that are even not traditional insurers, the guys that have the customer relationships and that are high transactional businesses. And there's these new entrants that come in that are really able to, I guess, create an insurance company in a completely digital way and offer only a digital experience to customers. How do you see that influencing the approach from traditional insurers, and how do they kind of adopt and adapt their own approach to take this into account?
Yeah, that's a beautiful question, Lee. I think in my experience and in my opinion, I think it's very positive. I think what we're seeing in the African space is a lot of consolidation of the insurers. So, at the lower end of the market, you might have insurers that have traditionally held licenses that maybe weren't active, or maybe they weren't aggressive in their growth strategies. Maybe they weren't great operators. So there's been some forced consolidation in that space. But let me talk rather to the scenario of a new player coming into the market with a unique differentiator that adds great value to the market. I think that's a tremendous benefit. I mentioned there's 2% penetration of insurance products in most of the African markets. So there's definitely scope for a lot of growth in the market. I'm a very strong believer that a high tide floats all ships. So a new entrant comes into the market, they're not going to be stealing market share. They're going to be growing market share. And I think certainly creating the awareness of, insurance products, the benefits being offered is net additive. For a new entrant that's coming into the market, if they're going to do it purely digitally, I think their credibility is going to be key. So the first thing that they're going to have to do is make sure that the process works efficiently. So from customer attraction to onboarding the customer, servicing requests, etc., those have all got to be seamless. But then I think the most important thing in terms of their sustainability or their ability to actually grow in the market is they've got to be able to honor the claims promise. So once claims come through, those claims have to be settled efficiently, timeously. And then I think, once you're able to market that benefit into the market, if you've got a proof of experience where customers, unfortunately in our space, life insurance claims mean typically that a significant life event has taken place, to be able to then go and show the family that, we've paid the claim out, it's had the desired impact, we've made sure that you haven't had to slip back into poverty, we've been able to offset a very tragic event. And I think that claims experience is going to be the key differentiator. And hopefully the larger players, the more established players, they'll see a lot of that innovation that's coming through, and they'll also adopt that as their standard practices. So I see it as very positive. Innovation is always good.
Good, brilliant.
Yeah, Eric, sorry, I'd like to, I think you agree wholeheartedly there. I think the new entrants certainly are there to disrupt. And I mean, with disruption forces the traditional players to rethink their game. And if that forces them to up their game in terms of offering to the policyholder, then that's for the good of everybody else. So certainly we've certainly seen the new entrants in the South African market. Some of the guys have really been brave and gone on that, digital only journey. But I think there we've seen them, they've also, had to move into a hybrid model, digital and intermediary. And I think it probably, answers our question is, are we just going to be this digital AI robotic, in 20 years time? And, probably not. There's still going to be the intermediary focus. So in my view, if an entrant's coming in and it's disrupting and it's causing innovation and it's driving, policyholder value creation, then it's good for all of us.
Very much agree.
Thanks very much, guys, and thanks very much for your time and joining us today, and for that valuable insight and input, both in terms of the presentations and the discussions. Thank you to everybody on the call that joined us. We will be having these sorts of webinars more frequently coming in the future. So we hope that you'll join us again. We'll be putting up some contact details as well. If anybody has any questions around any of the information shared, you can send it on to Nelson, and Nelson will facilitate the conversation from there. So lastly, thanks very much again to everybody for attending, and I hope you have a good day further.